The market's telling you that we are going to see trade deals, right? And the fact that since April 8th, the market's up over close to 20%. And market's a great forward forecaster. I think what it's telling you right now is these deals are going to get done, and that's why we haven't really seen a retrenchment in prices.
So today's sell-off is the result of the downgrading of America's debt. Is that it?
I would argue it's even just more profit-taking right now. We just had such a big move in the market over the last. I mean, the Magnificent Seven is up almost 30%. Since April.
True. That's huge.
It's huge. It's huge. So I think you're getting a little profit taking this morning. I do think the 10-year is up because there is concerns about the deficit. Yeah. There is concerns about the downgrade on the debt. So I think that is real, but I don't think that's bleeding over into stocks just yet.
Wait a minute. You've got 4.57 as the yield on the 10-year Treasury this morning. There is no way that mortgage rates are going to come down anytime soon with a 10-year Treasury yield at that level. That's not good for the market, not good for the economy either.
Not necessarily. And first off, you got to remember long term, the average rate on the 10-year Treasury is 4.75%. We've had a lot of great economies and great stock markets with yields a lot higher than they've been. You have to remember the last decade, we had ultra low interest rates, which aren't the normal, right? We're getting back to actually normal interest rates now that we didn't have before. And the world's adjusting to that. But I would argue, if you look at the economy just at face value right now, and you look at retail spending is up big, wages are going up, unemployment is low. This is really a recipe, I would argue, for a very strong economy this year, even if rates are a little bit higher. I don't think that's going to slow the economy down.
So you're in the camp that says we're going to get more trade deals, we're going to get a tax bill, we're going to get tax cuts, and we're going to get some deregulation, and therefore the economy will take off in the second half of the year, and so will the market. You're in that camp.
I would call that wildly bullish where I'm standing, but yes, 100%. I think you have to be optimistic here, and I think the market's already telling you that's happening.
Whoa, but it takes a strong stomach to buy today, doesn't it?
Well, Stuart, I mean, I think
no.
I think it was hard a month ago when I was still bullish. So I think right now the wind is at your back. I think we've already seen the lows of this move. And I think your bigger risk here is a melt up. If you look at the big institutional money, a lot of it's missed this move. A lot of money's been sitting in cash, worry about this recession that I don't think is going to come to fruition. So you have a lot of hot money that needs to get back in this market. Your bigger risk here is a melt up, not a melt down.
I like to hear that, you know. I mean, we'd all love to see a melt up. Todd here is laughing and grinning. I mean, you'd love to.
Blow his mind on Monday.
I love the back and forth. I'm just deciding, do I buy today or not? Yes to Payne. Stuart's like, hold up, cowboy.
No, I'm simply saying it takes a strong stomach to invest in a market that's falling like this. It does.
It's only a couple hundred points.
Have some sympathy for our viewers, please.
I'm trying to give them hope here, Stuart. That's my job on a Monday.
So, when does this melt up start?
I think it's already started. I think we've already seen a lot of cash come off the sidelines. Again, a 30% move in 7 stocks in just about a month's time is huge. So I think at this point, I don't know how many dips you're actually going to get. I'd get it.